ARM shares moving higher today. The company has seen positive momentum from generative AI demand following its Q4 earnings report. The CEO then saying they're seeing strong momentum and tailwinds on all things AI on the earnings call. Let's bring in John Vinh, KeyBanc Capital Markets Equity Research Analyst, to get his insights. John, great to see you. First and foremost, just how long out are the markets looking? How far out as we think about where the company is even talking about the AI demand and the investors trying to assess what type of multiple they should give to this company?
Yeah, I think the broader investor community is typically looking at 3 to 5 years out on a company like ARM. You know, if you think about kind of the drivers for them in terms of AI, you know, they're certainly getting significant traction in cloud hyperscalers as they are increasingly moving to ARM architectures. However, you know, penetration rates right now of ARM versus x86 is still pretty nascent. But there's still definitely momentum. It's likely going to be a much more meaningful contributor for them, 3 to 5 years out.
So, John, given that timeline, then, how much of the hype around AI or the sort of show and prove at this point has already been baked into ARM's valuation?
I think there's certainly, a significant amount of premium that's baked into to ARM. It certainly trades at a pretty hefty premium to the group. It trades at, between 40 to 50 times kind of 25 earnings at this point in time. The broader semiconductor group trades at a high teens multiple. But these guys certainly have a best-in-class operating model, licensing model, 90% gross margins. And we feel like over time, the market is increasingly moving towards them.
And so all that considered, when you kind of look at the different players within the space and kind of pair ARM against them, number one, does the revenue model that ARM has set up, is that set up adequately in order to make sure that they're capturing and monetizing fully the demand that is flowing their way on AI? And are they set to capture enough market share to kind of stave off or at least provide a baseline for investors to expect going forward?
Yeah, we certainly think so. If you think about kind of the ecosystem, I mean, they have hundreds of millions of developers who are developing products on ARM today. Obviously, not all of those products are being developed on, AI type of chips, but increasingly that's going to be one of their strongest assets that they have currently. And, their main competition right now is probably x86, right? The biggest incumbent there is Intel. And if you think about just the x86 architecture, it's really not optimized and levered and set up to benefit from this shift towards heterogeneous compute and generative AI.
And you have an overweight rating on the stock, price target of $120 here. You talked a little bit about the sort of where they fit in the generative AI space. Obviously, when you think of all companies involved, your NVIDIAs, you have your MSCI, sort of different ways to get into this space. What gives ARM their edge?
Yeah, their compute architecture is incredibly efficient and lower power. And power is increasingly becoming a greater issue within the data center. And that gives them a pretty significant advantage over x86 at this point.
At this point as well, you've got more capital flows that are going to be moving around, whether that's fundraises, and that's particularly interesting, not a fundraise, but looking for more capital is OpenAI as well at this time. Where do you believe that kind of moves some of the sentiment around, even in this broader landscape here for generative AI opportunities?
Yeah, I mean, our favorite kind of AI plays are going to be, AMD, NVIDIA, Broadcom, Marvell, and Micron. Each of those companies has significant exposure to where we think the market's pointing with generative AI. Obviously, GPUs are going to be front and center next week with NVIDIA. AMD, obviously, we think has a very strong offering that's starting to ramp. But some of the other players also play well into that AI ecosystem as well and should benefit from this increased investment on Gen AI over the next 3 to 5 years.
And so as we look at some of that pricing, because Sam Altman sort of making the rounds here, looking to build this generative AI tech center as they've been restricted in terms of the supply of advanced chips. But then you have NVIDIA's CEO saying, look, the prices of some of these things are supposed to come down as this technology gets more advanced and it becomes more available. The price should come down. How should we be viewing really the trajectory from here of generative AI spending here?
I think it's going to remain strong for the next, several years. I right now, as you know, just the whole market is supply constrained. Customers cannot get enough GPUs right now to supply their needs. Obviously, we think there's going to be a significant amount of industry capacity that's going to come online in the second half, but the demand is only going to be growing over the next several years.
We'll continue to watch that. Clearly, an ongoing story that on the minds of all earnings season watchers as well. John Vinh, KeyBanc Capital Markets Equity Research Analyst, thank you for your time this morning.
Thanks for having me.